Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So the S&P 500 has seen an unprecedented rally in the past few weeks, but the momentum has been slowing down recently to almost nothing. So I'm going to be explaining exactly what this means in this video and what kind of opportunities it could offer, whether you are looking for a retest of those lows like I am, or if you're looking for all-time highs like I know some of you subscribers are. Now I'm going to start off by showing you the percentage gain. I find that very interesting. If you take the percentage gain from the bottom here, on the first leg up, in the first 14 days, we had an almost 25% profit. These were massive gains. If you were on the right side of that trade, this was one of the biggest rallies the stock market has ever seen. And we actually managed to capture part of that initial leg up on this channel. And now if you take the percentage gain from that same point right here all the way to where we are currently sitting, that's a 6% gain in around 37 days. So that is just to show you the power of momentum in the market. As a daily chart swing trader, you need to take advantage of momentum. For the past month, nobody has been making money on the daily chart. Nobody. If you're on the hourly chart, you can capture some of these intraday gains, but on the daily chart, we have not seen a solid trend for a while. But I do think that is about to change, at least in the next couple of weeks. And that is exactly what I'll be discussing in this video. Don't hesitate to hit that like button if you enjoy this content and subscribe to the channel. We put out frequent updates on the markets and on cryptocurrencies with a very educational kind of approach, so don't miss out on future content. Now, whether you are looking for a retest of the lows or all-time highs, I think you should be expecting some kind of a drop, either for an actual trend change where we'll see lower lows, or just to renew the momentum to the upside, we need to see a drop. I think the bulls are not buying here. There is just no momentum left in this move. And if I was bullish on the stock market, no matter how bullish I could be about the future of the stock market, I would not be buying here. This is an overextended move and everybody knows it. The chances of us breaking out, having a big green candle right now, are almost zero. So this is just not a good place to go long on the markets. And I am going to prove that in detail on the hourly chart. But before I do that, I want to make a quick comparison to 2019. So I'm going to zoom out here and we can see the V-shaped recovery of 2019. These two price actions are very similar. You can see the MACD, the blue line, the faster moving average here, was hovering above the slower one for a while. And we're seeing the exact same thing right now with this recent slowdown in momentum. We had the same type of price action, a very quick 20% move up all the way here to around the same level, 20% move, and then a very slow grind around 5 to 6% move in a couple of months. So the similarities are astonishing between these two V-shaped recoveries, and that is one thing that does raise some questions for me. I do think that many people are getting tricked into thinking that this will just be a copy and paste of the 2019 recovery. And to me, that is probably not the case, but even if it is, even if this is a copy and paste of 2019, we need to get that type of bearish trend before we have a renewed momentum to the upside. So again, I know I'm saying this a lot, but whether you are looking for a retest of the lows or all-time highs, you will want to see a drop in the markets to either short the markets or get a better price on them. And I think the upside is, again, limited. I think the momentum is just too low to have a big green candle to the upside. So shorting here is not particularly risky unless, again, we have some type of huge good news about the current situation, about the shutdown or vaccine or anything. That is, of course, a risk that is always present, whether you are long or short. News can always go in your direction or against you. But in the absence of news, I highly doubt that we'll have a breakout, and that's exactly what I'm going to show you right now. So this is the hourly chart, and I don't often include the hourly chart in my videos, but I find it absolutely fascinating here because we have been seeing consistent divergence for the past 2 months. And what I mean by that is that the price is continuing on higher. It's been continuing on an uptrend for the past 2-3 months, making higher highs and higher lows. But if you take a look at the MACD, you can see that it is making a series of lower highs and going gradually down. And it's really starting to flatten out here. And so that is technical confirmation that the bull move, this huge bull move, has run out of fuel. Price is making higher highs, you can see, while the MACD is making lower highs. And that is the definition of divergence. And you can illustrate that very easily with arrows. You can see if you take an arrow from the first leg up right here, you can see it's a very steep arrow. And then you take a second arrow to the next leg up, it's slightly less steep. And then you take a third arrow to the next high, and you can see it lost even more momentum. And so what this basically means is that a trend change is likely to happen very soon. It means this move is overextended and that there are no more bulls to be buying at these prices. And the bears are very likely to step in very soon, and it does seem to be happening right now into the close. We sold into the close. We'll see how the markets react off of this trend line, but I think the futures are trending down below this trend line now. So if we open below this trend line, let's say around right here at the 2800 level, that would be a solid sell signal that would break this trend line that we have on the hourly chart, which doesn't appear on the daily chart, by the way, and that would likely start that downtrend that we've been talking about throughout this video. And we'll see till where we go. If we bounce at this 272 level, if the momentum is renewed off of this 272 level, we can bounce and head on higher. Or if we begin a longer term daily chart downtrend to lower lows. And that is how the markets tend to work. The bears let the bulls do their thing until there's no more momentum, no more evidence of buying power, and that is when the bears step in and do their thing, and the bulls step aside, wait for the momentum to the downside to wane, and that's when the bears step back in. Now I'm going to take a quick look at the weekly chart. I have a few things to highlight. This is the weekly, and the first thing I want to mention is this weekly MACD crossover. So again, this indicator is showing the momentum, and so when you have a crossover, it means there is a momentum switch on that time frame. And you can see we had a momentum switch in 2019 right here, and that led to a very nice rally. And same thing in 2016, same thing in 2015 again. So in the scenario where we have that small correction on the hourly chart or on the daily chart, we come back down to the 272 level, and then we bounce and break out. That would be a confirmed bullish MACD crossover, and that would be extremely bullish. Again, I do not favor this scenario, but if it happens, and you have to follow what the chart says. Now, I also wanted to cover the big pattern forming on the weekly chart. You can see we have a downtrend line right here. This is a pattern that a lot of people have been talking about, and I wanted to give you guys what I think about this pattern exactly. We have this trend line and we have a head and shoulder pattern. So we have the left shoulder right here, the head right here, and then the right shoulder over here. And so far we don't have the right shoulder completed. So this pattern is still potential and it's not playing out. A head and shoulder pattern doesn't play out until it's fully formed, until you break that trend line. And so what we would need to complete the pattern is a move down, another leg down, and then a break of this trend line, and then you'd be able to measure out the target, and that's what I'm going to show you. But one thing a lot of people miss on the head and shoulder pattern, and that is very useful information for the future if you trade. The main characteristic of a head and shoulder pattern is that you have to have high volume on the legs down. So this needs to be high volume, this needs to be high volume as well, and this also needs to be on high volume. And so far so good. We've had huge volume here in comparison to the rest. We had huge volume on this leg down for obvious reasons. But again, we need to have the last leg down in order for this pattern to be complete. Now, if it does play out, if we do have another high volume leg down and then we break this trend line, then this would be a very scary scenario for the stock market, because the measured target for a head and shoulder pattern is the height of the head to the neckline, and take it to the point where it breaks, and you have that measured target. And so that would take the stock market all the way to around here, the 1,200 point level. That is a very scary scenario for the stock market, but to me, honestly, it is not that unrealistic. I think in the current economic environment, seeing a drop all the way down here would actually be healthy. If the stock market's valuations do not come down significantly after what has happened, then you can 100% say that the stock market is in an artificial bubble. And what happens to bubble? They burst. So whether that be right now, a week from now, or 2-3 years from now, the stock market is going to get very ugly. Now that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading, and see you next time.